Silver has just rocketed 22% from its $65 low. The big question on every investor's mind, is this the definitive bottom or just another fake out? After a punishing drop that saw prices touch the $65 mark, silver has staged a massive and rapid recovery, catching many short sellers off guard. This 22% bounce is one of the most aggressive moves we've seen in the precious metals space this year, following the extreme volatility of early 2026. The initial crash from the $120 highs was driven by forced liquidations and a broader market reset, leaving many wondering if the silver bull run was over. But beneath the surface of the paper price, the physical silver market is telling a very different and much more bullish story. Reports of a seizure in the London market have surfaced, with borrowing rates spiking over 100% as physical supply becomes nearly impossible to source. Inventories in major hubs like London and New York have dropped by a third, reaching levels not seen in decades as institutions drain the remaining stocks. In India, silver is trading at massive premiums as festival demand collides with a severe shortage of available imports, further straining the global price. Analysts estimate a global supply gap of nearly 1 billion ounces, a structural deficit that is expected to persist as demand continues to accelerate. The solar industry alone now consumes over 25% of the annual silver supply, a figure that is projected to double by 2030 as the green energy transition intensifies. Electric vehicles are another massive driver, with silver demand in the EV sector growing by 20% this year due to advanced sensors and power management. And now a new player has entered the field: AI infrastructure. Data centers are utilizing silver for its high efficiency in electrical components for extreme power loads. This industrial demand represents over half of all silver consumption, providing a solid floor for the price, even when investor sentiment wavers. Silver's unmatched conductivity makes it the essential metal of the modern age, from your smartphone to the advanced AI systems of tomorrow. Beyond industry, the debasement trade is gaining momentum. Investors are favoring tangible assets like silver as a hedge against persistent inflation and currency weakness. As central banks continue to grapple with debt and monetary expansion, the appeal of a hard asset that cannot be printed is becoming undeniable. The expected Federal Reserve easing and a potentially weaker US dollar are providing the perfect tailwinds for silver to break past its previous resistance levels. However, silver is notoriously volatile. It often moves 2 to 3 times as much as gold on any given day, which can lead to rapid gains but also sharp corrections. The gold-to-silver ratio recently hit significant extremes, signaling to many that silver was undervalued relative to its yellow counterpart. Institutional buyers are now focusing on wholesale bullion, securing large 1,000-ounce bars to protect against future shortages in the retail market. So is the $65 mark the definitive bottom? Some major banks, like Bank of America, have revised their targets upward to 65 and beyond. Others are even more bullish, with some independent analysts projecting silver could hit $100 or more by the end of 2026. The possibility of triple-digit silver is no longer a fringe theory, but a serious conversation among those tracking the structural shift in global demand. But we must consider the risks. A sudden strengthening of the dollar or a rapid decrease in geopolitical tension could easily check this rally. The silver market is a high-stakes arena where sentiment can shift in an instant, driven by algorithms and global news cycles. The fundamental reality of supply remains the biggest support. It is getting harder and more expensive to pull this metal out of the ground. Sourcing physical silver is becoming a challenge even for the largest funds, with some pausing new allocations due to a lack of deliverable metal. For the individual investor, silver offers a way to step outside of the digital financial system and hold something of real, intrinsic value. While it shouldn't be your entire strategy, silver's low correlation to other assets makes it a powerful diversifier for a long-term portfolio. The 22% rocket from the $65 low is a signal that cannot be ignored. It shows that there is a massive amount of buying power waiting at these levels. Support levels are being tested and held, forming a base for what could be the next major leg of this multi-year silver bull market. Whether you are an industrial giant or a retail saver, the story of silver is far from over. This move is a testament to the metal's enduring value. In my view, the fundamentals are too strong for this to be just a fake-out. The $65 bottom looks like a significant foundation for future growth. As always, this is for educational purposes. Do your own due diligence and consult with a financial advisor before making any investment decisions. Thank you for watching. Stay informed, stay disciplined, and we'll see you in the next market update.